Hey YouTube, this is Zach with Achilles Financial. Today I want to be looking at three different items that are approaching over the next 2 weeks that I don't believe are going to be very good for markets. And then we're going to look at them in detail. The first item I want to be looking at is Evergrande is officially going to be defaulting on October 23rd. So that is rapidly approaching. I'm going to be watching that quite closely. The second thing that could be a huge impact is going to be a potential GDP estimate miss that would be on October 28th. And we could officially see the Fed begin to taper on November 3rd. And we're going to be looking at all of that information. Some of the ideas that were projected there and the way that they have been outlined are coming from Marlo877 in the Discord. He and I have been talking about some of this information, and I wanted to do a deeper dive. So we're going to be doing so here. I wanted to showcase, to lead into some of this conversation, what the overall market looks like over the course of the past 5 years. So you can see that during that time, we've more than doubled in terms of the overall experience from about 2017 all the way up into nearing the end of 2021. So we saw that rapid rise coming in from the crash of 2020, and we've now hovered at about the same level for the better part of the past 3 months. So primarily looking at the end of August and all the way into the end of October, we've kind of seen this flatline motion. This is despite the fact that we've seen a significant rise in items such as PCE, PCI, inflation metrics that the Federal Reserve tends to utilize. As such, there's been increased calls to action pointing to the Fed, asking for them to maintain some level of control on inflation. What that tends to do is tends to be bearish for equity markets. Whenever there's high inflation, we then move to have high interest rates, at which point in time, speculative stocks in particular will fall. So we'll be interested to see how that applies going forward. But the first thing that I want to look at that I think could have larger ramifications that has been quieted over the course of the past few months, or the past month in particular, is the debt of Evergrande officially defaulting within the next week. So what does that look like? So if I pull up Evergrande, you can see some of the media coverage that we have here, and you can see that the Chinese government is taking on some of that debt concern. They are not officially bailing out Evergrande at this point in time, but it's important to note that we're seeing pretty large companies such as Cynic, such as Evergrande defaulting. This is going to have larger consequences than I believe are currently felt at this point in time right now. I think that this is going to have a huge impact on the real estate market worldwide. I think we're going to see a significant impact on real estate and construction prices, specifically associated with Chinese stocks, as well as we're continuing to see a lot of impact from the Chinese economy by way of coal prices, by way of their impact on the overall oil market, despite the fact that they're not a producer, but rather a very large consumer. There is a lot of things to worry about that I think the Evergrande default could be one of the things that kind of pushes them over the edge. Because we are such an intertwined economy with China, I do believe that this could be concerning. The second thing that I want to highlight is going to be the GDP for the United States that's going to be announced here within the next 10 days. The reason why I'm concerned is because today, the Federal Reserve Bank of Atlanta changed their GDP forecast once again. Right now, you can see what I have up here is the line of how that estimate has changed month over month as they continue to update this. We're now at less than 0.5% for the expected GDP growth Q3. You can see that this was over 6% for most of July as well as most of August. The fact that this has continued to decline, and we're seeing one of the largest differences between the Atlanta Fed GDP estimate and the blue chip consensus, again asking some of the largest companies out there what their expectations are, this could lead for a potentially huge miss. Keep in mind that if the United States economy is not growing, then we're expected to see that on the earnings side, on the net income side associated with all of the companies that are going to be reporting over the course of the next few weeks. a lot of those companies are announcing this week as well as next week, particularly as we continue to look at the larger tech companies and manufacturing. So a miss here could be incredibly negative for the United States market, as it has been quite some time since we've seen this sort of stagflation-based GDP miss, especially if the GDP goes negative. Now, should we start to see some form of pressure here, it may change or have an effect on the very last item I want to talk about. But the main thing that I'm going to look at is going to be, is the Federal Reserve going to begin to taper? We do have the capability on TD Ameritrade to pull up a number of different items on our economic events page. What I'm going to be looking at is we are going to be having that FOMC rate decision coming out on November 3rd. The expectation here is that we'll continue to hear some additional feedback surrounding some of the decisions that the Federal Reserve is going to be making. If they begin to taper, essentially what they will be doing is slowing down their rate of asset purchases, which is around $120 billion a month that are primarily used to backstop the U.S. economy in the form of things such as treasuries, amongst other items. What will be interesting here is as they taper that down, that tends to foresee a rate increase, at which point in time right now the bond market is forecasting 2 rate increases in 2022. Right now I believe the dot plot is expecting at least 1, potentially 2 next year, especially with 2 of the more hawkish Fed presidents in Kaplan and Rosengren going to retire. We may expect to see that get pushed out, but the point is being there's going to be less of a backstop right now. It's slowing down, and that could have a negative impact. All that being said, I am pretty heavy cash at this point in time. I have my long-termers, but I have not been doing a lot of active trading, and I don't have many hedges out there at this point in time. I do post all my trades in the Discord. So if you're looking to follow something, feel free to check that out. But right now, I don't think that I'm going to have a crazy 1,000% return on a put play, but I am starting to bring on more and more onto the sideline. And because of that, I am going to kind of sit, wait, and watch. I don't think that I'm going to be missing anything crazy. And if I do, it's been a great year thus far, and I'm not too worried about it. So if you have any questions, feel free to drop those in the comment section down below or in the Discord. Let me know if you found this helpful. Thanks. Talk to you later.